And please, it's very important. Okay, so we are starting off with question 5. As I was saying, that it's very important, please, if you get time, if you know that you usually get time during the day before class, it's always good if you attempt the questions before we can do them together. It really helps. So if you get time, make sure that you always attempt the question before class, before the session. And that's how we learn, by practicing. And at least if you do the activity, if you attempt the question on your own, you will, at least that's how you will learn. That's how you will even figure out all the mistakes that you did, and we learn from our mistakes, from doing mistakes. Yeah. And I actually wanted to find out before we start. Okay, so let's continue with our question 4. Oh, I wrote question 5. So let's continue with question 4, which is the non-governmental organizations. So what are non-governmental organizations? These are businesses that, whereby their main aim is not to make profit. Ne? So these are organizations, or they are businesses, but their main aim is not to make profit, but to render service, ne? Free service. These are, for example, church clubs, soccer clubs, all these kind of clubs, that choirs, a church choir, and so on. Red Cross. We have a lot of organizations whereby their main aim is not to make profit. So this does not mean that if you have an organization, let me say you have a foundation, this does not mean that you do not need to keep records. You are still a business, ne? You are still a business, and so you will need to keep all financial records. You will need to or you will need to draw up your financial statements at the end of the period. So when it comes to non-governmental organizations, if you go to the slides, I hope we all have slides. The slides are on the portal. You can get a lot of slides from the portal. So if you go through your slides, you will see that we have new terms. When it comes to the non-governmental organizations, we have new terms that are totally different, or that not totally different. They actually just the names are different, but they have the same meaning with those of trading businesses. Remember, trading businesses are businesses that their main aim is to make profit. So the example of terms that we have is subscriptions. So in non-governmental organizations, we have what we call subscriptions. Now, subscriptions, this is the membership fees. Ne? So if you are part of, let me say you are part of a foundation. Ne? So you are part of a foundation or a church club or something, community club. So there is a certain fee called a membership fee. So whenever you join, then you have to pay maybe $30 for you to be a member. And then once you are a member, you'll be required to pay maybe $50 per year or $50 per month as subscriptions. So subscriptions, these are the cash received from the members. And it's an income of non-profit making organizations. That is their main income. So they get their main income from members by paying subscriptions. And then another term that we have in the non-governmental organizations is expenditures. So expenditures are actually expenses. So when it comes to trading accounts, our electricity that we pay, our salaries, wages, everything, commissions paid, rent paid, those are expenses. But when it comes to non-profit making organizations, expenses are known as expenditures. Ne? They are known as an expenditures. And then another difference is that in the trading account, we draw up an income statement. Ne? So in the trading account, we draw up an income statement. That is our financial statement, or our, in other words, an statement of comprehensive income. But then when it comes to non-profit making organizations, we draw up an income and expenditure account. So non-profit making organization, we do not draw up we do not draw up a statement, an income statement, but we draw up a income and expenditure account. Okay. And then now another different term between the two businesses, we have what we call net profit. Ne? So in the trading businesses, ne, in the income statement, when we make a profit, it's known as net profit. But then in the non-profit making organizations, profit is known as a surplus. So when you make a profit, which is in your income and expenditure account, it's known as a surplus. And when it's a loss, it's known as a deficit. And then another thing again, another difference again in your trading account and in your non-profit making organizations is a cash book. Ne? So trading accounts prepare cash books. So trading accounts prepare cash books, while a non-profit making organizations only have a receipt and payment book. So they only have a receipt and payment book. So please just go back to your summaries or to your slides of non-profit making organizations. All those things are there, well explained. Okay, so this question, we go back to our question. That was just a short brief or a short explanation of the topic, but it's well explained in the slides. So let's go back to our question. So we are given the information below relates to the Oshakati Youth Club for the accounting period ending 31 December 2016. So you are required to draw up the Oshakati Youth Club subscription account and also to draw up the income and expenditure account for the year. Okay, there's something else that I wanna talk about. Ne? So we said that non-profit making organizations do not they do not draw up an income statement. Ne? They draw up an income and expenditure account or statement. But there are cases where a certain, let me say you have a community club, ne? Or maybe a foundation. Then you guys decided, okay, for us to raise more income, how about we come up with a restaurant, ne? Or how about we come up with a bar that will be we'll be selling, and then we can at least make some profit out of the bar that will help us to carry out our activities, ne? So this simply means that non-profit making organizations can also do trading businesses, but this does not mean that they are a trading business. They are only having a trading business, or they are only having a bar for them to raise more money to carry out their activities, but their main aim is not to make profit. They actually just want extra money. They actually just want extra money that will help them carry out their activities. Now, cases whereby a non-profit making organization has a bar or has a restaurant or has any other trading business that is involved in any trading business, then they will be required to draw up a trading account. And I hope we all know what a trading account is in accounting. A trading account is the first part of your income statement that ends at gross profit. So sales less cost of sales equals to gross profit, and that is your trading account. And then when you add the expenses, it becomes an income statement when you add the expenses, when you less the expenses. But the one that stops at gross profit is a trading account, and that's what you draw up in cases where your non-profit making organization has a bar, a restaurant, or any other trading business activity. Do we understand? Do we understand?
Can you repeat again there where you are talking about the trading account, trading
Okay.
account under subscription account?
Okay. So we said that when it comes to non-profit making organizations, we said that their main aim is not to make profit but to offer service. They do not make profit. They actually just want to render service to people for free or to the community. So this does not mean that they are not allowed to do trading businesses. So let me say you have your organization, so you have your organization, your non-profit making organization, and then you decide, okay guys, we do not have enough funds, so how about we come up with a fundraising activity? Or how about we come up with a bar or a stall that will help us raise more funds for our non-profit making organization? So as soon as you come up with a bar, that's already a trading business because you are selling, ne? But the main aim is not to make profit. The main aim of your business is not to make profit, but you have a bar because you want to raise more funds to be able to carry out your activities. Now, in cases where your non-profit making organization has or is involved in trading businesses, whereby you guys have a bar, have a stall, have a restaurant or so, then you will be required to draw up a trading account. And we say that with a trading account, that is the first part of your income statement, which is sales less cost of sales, then you get your gross profit. So the part of your income statement that ends at gross profit is known as the trading account, and that's what you draw up in cases where your non-profit making organization is involved in trading businesses.
Okay.
Yeah. So let's go back to our to the question that we have. We are asked to draw up our subscription account. So subscription is an income to the non-profit making organization. That is the biggest income that you have. So if you have a foundation, where do you get your cash from, or where do you get your funds from? So most of the funds you get it from the members when they pay membership per month or when they pay subscriptions. So basically subscriptions is the main or is the biggest income of a non-profit making organization. So a subscriptions are incomes, ne? And we know that incomes increases on the credit side and decreases on the debit side. That you should know by now. So you are asked to draw up subscriptions account. And why do we draw up a subscription account? We actually want to find out the total amount that is paid for this year, or the total amount that belongs to the current year. Remember, some members can pay in advance, meaning that they can pay membership including the one of next year. They are paying in advance. So when they pay in advance, or some members at the end of the year, they did not even pay their subscriptions for this current year. So in this case where you have accruals and prepayments of your subscriptions, you will be required to draw up a subscriptions account in order for you to calculate the exact amount that belongs to this current financial period. Okay, so a subscriptions account is actually just a ledger account. So you have the details, volume, amount, then details, volume, amount. Okay. So I'm quickly going to draw up our subscriptions account. This is the debit side. Sub and then you have your credit side. Okay, so we have the date, details, volume, and then the amount, the date, the details, volume, amount. Okay, so we say the subscription is an income account. It's an income to the non-profit, to the organization, meaning that all amounts, all subscriptions that belong to this current year, that belongs to the current year, will have to be on the credit side, ne? So all the amounts that belong to 2016 will have to be on the credit side, and all amounts that do not belong to 2016 will need to go on the debit side. Why? Because you will need to subtract them. You will need to take them out. You will need to subtract them from your subscriptions. You are trying to get the amount that belongs to only 2016. Now, for example, in total you received 5,000. Now, out of that 5,000, you are told that 2,000 belongs to the previous year. So what total amount belongs to the current year? Out of 5,000, you are told that 2,000 belongs to the previous year. So this year, the amount that belongs to this current year is only 3,000. It's only 3,000, and that's the amount we are trying to get in our subscriptions account. Okay. Now looking at this at the information that you are given, we are told that subscriptions received 2015, meaning you receive subscriptions, 2,000 is for 2015. And we said information or subscriptions that belong to the previous year, what do? You will need to debit them. Do you understand? So in this case, the 2,000 will go on the debit side. Why? Because it belongs to 2015. You are told subscription received, but it's for 2015. And that is a 2,000. So what do you record in details? What you record in details is, okay, what do you call this subscription of 2015? That is an accrued subscription. It's an accrued income. It was accrued, meaning it's owing. It was not paid in 2015. So it's either you record accrued or you write balance brought down. So it's either you write accrued income or balance brought down. Why balance brought down? Because you can see that it's 2015, meaning that what did we say about information for previous year? The 2000 belongs to previous year, and we say that information of balances of previous year becomes our opening balances of the current year. So the 2000, this is the balance of the previous year. It's an accrual from the previous year, and therefore this year it will be treated as a balance brought down. Or if you feel like the balancing things will confuse you, you can even write accrued income, not accrued balance, but accrued income. Why is it accrued income? Because the 2000, when you recorded your information in 2015, the 2000 was not received, and therefore you wrote it as accrued income. Do you understand? In 2015, the 2000 was not received. It was owing. Members did not pay the 2000. So you recorded it as accrued income. And that's why you record it as accrued income. So this is actually accrued income at the beginning of the year. And what did we say about accruals at the beginning of the year? Accruals at the beginning of the year are subtracted. Accruals at the end of the year are added, meaning that if you have an accrued subscriptions or subscriptions owing in 2015, then you know that they belong to, in 2016, then you know that they belong to 2016, they belong to the current year, and therefore they should be added. Guys, do you understand? Okay. So in this case, you have subscriptions, and because that is a balance brought down, therefore it should be recorded on the first day of the financial period. So 2016, January the 1st. Why? Because looking at this, the information that you got, your financial year ends in December, meaning that it starts on the 1st of January. And the accrued income, that is a balance from the previous year. And that's why it's a balance brought down in the current year. So 2016, January the 1st, you have balance or accrued income of 2000. Okay. And then you have 2016. What did you 2016? You received subscriptions in 2016. So you have 2016 December, because now this information belongs to 2016. That's why you write the last day of the financial period, December the 31st. You receive subscriptions. Ne? So in this case, you receive subscriptions. It's either you write bank or cash. Ne? You can write bank or cash, because you are not told whether the subscriptions was paid into the bank account or you received cash. So you can either write bank or you can write cash. You have to write the form of payment. So subscriptions of 2016 amounted to 24,000. Okay, and then from there you record what other information do we have that has to do with subscriptions. Now looking at the last part, ne? The last amount, you are told the subscriptions owing for 2016. For owing, they are owing and they belong to 2016, meaning that they need to be added. Do you understand? Meaning that they need to be added, and therefore we'll need to record them on the credit side. So you record them as subscriptions accrued income. It's either accrued income or balance carried down. So why is it a balance carried down? Because this amount is not paid, and because it's not paid, you will need to carry it forward like this. So if you are to draw up your subscriptions in 2017, you will have accrued income or balance brought down of 3,000 as the ones that you are given. So what they did last year, they had a balance carried down, or they had accrued income of 2,000, and that's why this year you brought it down. Now that we do not have any other information regarding our subscriptions account, we will need to balance it off. Now looking at this, the credit side is the biggest, né? So we have 27,000 on the credit side. So we record this figure on both sides, 27,000. Okay, so 27,000 minus 2,000 will give us 25,000, né? So it will give us 25,000. Oh, and sorry, there's we forgot something. And again, you can maybe record it somewhere. Okay, now you are told that the 2015 money was received, né? It was received. So the 2,000, this was your balance brought down at the beginning of the year. But because you received the money in 2016, you still need to record it. The double entry principle, you debited your bank ledger with 2,000 that belongs to the previous year, and so you will still need to do your double entry, and therefore you will have cash or bank of 2,000. Ne? Now looking at these two amounts, these 2,000, the 2,000 here and the 2,000 here will even cancel off each other out. So, or in other words, if you feel like this whole table will confuse you, ne? If you feel like this whole table will confuse you, you just add up all the, you don't even need to draw up the subscriptions account. You actually just add up your amount. You are told to calculate subscriptions. Oh, okay. Now in this case, you have to draw the subscriptions account. So you actually just have to draw it. So let's balance off our subscriptions account. In this case, you are told to draw up the subscriptions, but there's another way where you can calculate your subscription without drawing up the table. But in this case, you are told to draw up the account, and therefore you will need to draw it up. So on the debit side, we have 29,000. So 29,000 minus 2,000 will give us 27,000 that belongs to this year, and this amount will be transferred to our income. So this is not a balance brought down, but this amount will be transferred to our income and expenditure. So why don't we write, why is it not a balance brought down? Because please take note of this, that incomes and expenses are not balanced off, but they are closed off to your income statement, or in this case to your income and expenditure account. Incomes and expenses are closed off. They are not balanced. Now, in this case, subscriptions is an income, and therefore you have to close it off to your income and expenditure account, meaning that 27,000 is the amount that you will have to record in your income and expenditure account. Do we understand?
Not really. Um,
Uh-huh.
after we record the 2000, after we record the 2000
This
as
one.
cash or balance. Yes, that one.
Okay, the 2000. Okay, remember you have. Okay, remember last year there are members that did not pay. Ne? So last year a 2000 was not paid, was not received. Do you understand?
Mm.
It
Mm.
was not received, and then you are told that 20 now last year's 2000 was received this current year. Do you understand?
Mm.
You will have to cancel it out, or in other words you are told that it is received, and when it's received you will need to record double entry. And what are the two accounts involved? Obviously, when you received the 2000, what are the two accounts involved in that transaction? It's your subscriptions account. Remember, this balance was written on the 1st of January. So in on the 1st of January, you were not told that this 2000 will be paid this year. You are not aware. But it happened to be that the members managed to pay the 2000 during the year. Ne? They managed to pay the 2000 during the year. So because of the double entry principle, it says that for every debit there should be a credit. So what are that you are told that okay 2000 received 2000 of subscriptions that belongs to 2015 was received. So you will need to record the transaction where in your receipt and payment, or in other words, your cash book. Ne? So you have two accounts. One is bank and one is subscriptions. Those are the two accounts. Now let's record that transaction. What will happen to your bank balance? It will increase, and therefore you will need to record it on the debit side of your bank account. Do you understand? And
Mm.
what's the other account? It's subscriptions. What is happening to your subscriptions account? You receive subscription. Your subscriptions are increasing. So therefore, when subscriptions increase, they increase on the credit side. Do you understand? Therefore, that's why you
Mm.
record cash bank on the credit side 2000. But because this amount does not belong to this year, it will cancel each other out with the 2000. And that's why if you are to calculate the amounts that belong to this year, if you check on the information, you are told that 24,000 belongs to 2016, and 3,000 belongs to 2016. Therefore, 24,000 plus 3,000 will give you 27,000. So if you're not asked to draw the subscriptions account, then you could just have added 24,000 plus 3,000, then you get your 27,000 straightforward without having to draw up your subscriptions account. But because you are told to draw up a subscriptions account, you will need to show all this information. These two amounts, the 2,000 that was received and the 2,000 that was owing, will cancel each other out, and at the end of the day they will not be included in this 27,000.
Thousand.
Do we
Okay.
understand now?
Yeah,
Okay,
I'm
and
getting
our
it now.
class will end itself any minute soon, so we'll do the rest of the question tomorrow. So we'll do the rest of the question tomorrow. Any other questions before it ends itself? In case you have a question, please feel free to ask me on the group. I will always respond when I get time. And I will share the links to tonight. I will share all the links of the sessions that we did tonight. I'll just have to upload these ones, the today's ones, then I'll send everything.
Okay.
Okay, thank you very much.